Imagine waking up tomorrow morning. You grab your phone, and before your eyes can even fully focus, you see breaking news flashing everywhere. Tensions rising between major global powers, markets shaking, currencies reacting, and one silent player slowly gaining strength behind the scenes. Gold, not making noise, not chasing headlines, but quietly becoming the center of attention for smart money. And right now, something big is unfolding, something that most people will only understand after it's too late. Because geopolitical tension isn't just about politics, it's about money flows, fear, and where the world runs when uncertainty takes over. Now, before we go deeper, if you want to stay ahead of these global moves and understand where smart money's going, make sure you hit like and subscribe to the Gold Report, because here we break down what others only talk about after the move is already done. So let's talk about what's really happening. Every time geopolitical tension rises, whether it's conflict, trade wars, sanctions, or political instability, markets don't just react randomly. There is a pattern, a very consistent, almost predictable shift in behavior. Investors begin to move away from risk and toward safety. This is what we call safe haven demand, and gold, for decades, even centuries, has been at the center of that shift. Think about it this way. When everything feels stable, investors chase growth. Stocks go up, tech rallies, risk assets shine. But the moment uncertainty creeps in, everything changes. Suddenly, growth doesn't matter as much as protection. Preservation of wealth becomes the priority, and that's where gold steps in. Now here's the part most people miss. Gold doesn't wait for the news to become obvious. It starts reacting quietly, early, sometimes even before headlines explode. Smart money, institutional investors, central banks, they don't wait for confirmation. They move on anticipation, and that's why gold often starts rising when fear is still building in the background. Right now, geopolitical tensions across the world are not just random events. They're connected. Supply chains, energy markets, currency systems, everything is linked. When one region becomes unstable, the impact spreads globally. And that ripple effect creates uncertainty in financial markets. Let's break it down simply. When tensions rise, three major things happen. First, investors reduce exposure to risky assets. Second, currencies can become volatile. And third, demand for safe assets increases. Gold benefits from all three. But here's where it gets even more interesting. It's not just individual investors buying gold. Central banks have been increasing their gold reserves at a record pace. Why? Because in a world where geopolitical risks are rising, trust becomes fragile. And gold, unlike currencies, doesn't depend on any government. This is a key point. When tensions involve major economies, trust in fiat currencies can weaken. And when that happens, gold becomes more attractive as a neutral asset. It doesn't carry political risk. It doesn't rely on policy decisions. It simply exists as a store of value. Now imagine this scenario. A major conflict escalates. Markets react instantly. Stocks drop. Oil spikes. Currency markets become unstable. And in that chaos, where does money go? It looks for safety. And historically, gold has always been one of the first destinations. But it's not just about extreme events. Even the buildup of tension, the uncertainty, the fear of what might happen, that alone is enough to drive demand for gold. Because markets don't wait for events to happen. They price in expectations. This is why understanding geopolitical tension is so important if you're following gold. It's not just about what is happening. It's about what could happen next. And the more uncertain the future looks, the stronger the case for gold becomes. Now let's talk about psychology. Because at the end of the day, markets are driven by human behavior. Fear and greed. When fear dominates, investors become defensive. They stop chasing returns and start protecting capital. And gold fits perfectly into that mindset. You'll notice something interesting. During times of calm, gold might move slowly, even sideways. But the moment uncertainty spikes, gold reacts faster than most people expect. And those who understand the pattern are already positioned before the big move. This is why timing matters. Most retail investors enter late. They see gold rising, headlines everywhere, and then they jump in. But by that time, smart money has already taken positions earlier. The real opportunity is in understanding the early signals. And one of the biggest early signals is rising geopolitical tension. Now let's connect this to the bigger picture. The world today is more interconnected than ever before. A single event in one region can impact global markets within hours. Information spreads instantly, reactions are faster, and that means market moves can also be sharper. This creates both risk and opportunity. Risk for those who react late, and opportunity for those who understand the dynamics early. Gold sits right at the center of this dynamic. It's not just a commodity. It's a reflection of global confidence or lack of it. When confidence drops, gold rises. Now think about the current environment. Ongoing tensions, economic uncertainty, shifting alliances. All of this creates a perfect setup for safe haven demand. And gold is one of the primary beneficiaries. But here's something even deeper. It's not just about fear, it's about trust. When trust in systems weakens, whether it's political systems, financial systems, or currency systems, gold becomes more attractive. And this is why long-term investors always keep an eye on gold during uncertain times, not because it always goes up, but because it acts as protection. Now let's shift slightly and talk about behavior during crises. When markets panic, liquidity becomes important. Investors want assets they can trust and easily move into. Gold provides that. It has global acceptance, it's liquid, and it has historical credibility. This combination makes it unique. Not many assets can offer that level of trust during uncertain times. And here's the key takeaway. Geopolitical tension doesn't need to turn into full-scale crisis to impact gold. Even the possibility, the uncertainty, is enough to drive demand. So if you're watching gold, don't just look at charts. Look at the world. Look at the headlines. Look at the relationships between countries. Because that's where the real story begins. And as we move forward, the question is not whether geopolitical tensions will exist, because they always do. The real question is, how will markets react? And how early can you position yourself before the majority catches on? Because by the time everyone is talking about it, the move is already in progress. And if you've made it this far, I want to know your opinion. Do you think rising geopolitical tensions will push gold to new highs? Or is this just temporary fear in the market? Drop your thoughts in the comments. And don't forget to share this with someone who follows gold, because understanding this could make a big difference in how you see the market. Stay sharp, stay informed, and keep watching the Gold Report, because the next big move might already be starting.